London Stock Exchange is in talks to buy data analytics firm Refinitiv in a $27 billion deal that includes the company's $12.2 billion worth of debt. Refinitiv is the renamed Thomson Reuters business without the news agency division. It is the home of the Icon desktop terminals and brings data and analytics to over 40,000 clients in 190 countries. Those clients include banks, investment firms and governments. The deal comes less than a year after private equity firm Blackstone acquired a majority stake in Refinitiv from Thomson Reuters, at the time valuing the company at $20 billion. Thomson Reuters still own 45% of Refinitiv, and should the deal complete, they will in turn own a 15% stake in the London Stock Exchange. LSE have stated that they will fund the merger with newly issued shares, giving Refinitiv investors a stake in the exchange company. Once news of the deal broke, Thomson Reuters shares hit a record high of 92.74 Canadian dollars. The stock is up 62% since the end of January 2018, when Blackstone and Thomson Reuters announced the deal for Refinitiv. The proposed merger would expand LSE's information services business, which the exchange operator has been building as a more stable source of income than its primary transaction-reliant businesses. The London Stock Exchange is currently valued at $23.9 billion, with a net debt in the region of $1.2 billion. They have failed several times to merge with rival Deutsche Börse. Following the most recent failed attempt, former Goldman Sachs banker David Schwimmer was appointed as CEO. Buying Refinitiv could help soften the blow for the LSE from the market volatility expected to follow should new UK Prime Minister Boris Johnson take the country out of the EU without a deal on October the 31st, a move the IMF have warned could damage the global economy. Schwimmer stated last month that the LSE were very prepared for Brexit, having already opened an EU base in Amsterdam for Turquoise, its London-based pan-European share trading platform. Under Blackstone's majority ownership, Refinitiv has been shedding non-core assets. In April, it launched a successful IPO of TradeWeb Markets, an electronic trading platform for bonds and derivative instruments. It has also been in talks with Deutsche Börse about selling its foreign exchange electronic trading platform FXall. However, Deutsche Börse confirmed last week, as with LSE, they no longer expect to reach a deal. Blackstone's consortium that holds the 55% stake in Refinitiv includes Canada Pension Plan Investment Board and Singaporean sovereign wealth fund GIC Special Investments.